Hello and Merry Christmas, listeners. It's the festive season again with market participants in a holiday mood. Now, keeping up with this spirit, we thought we'll keep it brief and welcome back you quickly to Almus Market Mornings with Shikhar Garg. Folks, after 5 weeks of increasing reserves, our central bank reserves again saw some dip in the previous weeks. Oil inched higher on discussions around supply cuts by Russia. And by the close of the week, we also had US core inflation data released, which continued to put questions on the terminal rates. So, JK, what are your thoughts? What's going on? I believe the updates must be less.
Yeah, yes, it's been very slow activity and very low volatility. But New York session on Friday did infuse some life with quite a bit of data. As you said, the price index for core PCE were lower than last month, both headline and core, and both on month-on-month and year-on-year basis. What's important for me is that there is a steady moderation in price pressures. Personal income also was stronger than expected, of course, but the personal spending was lower. So it was 0.1% versus 0.9 last month. So something for Fed to take from these things when they decide the next monetary policy meeting. Fed always had a view that consumer inflation expectations is more important, and that is what the Michigan survey final indicated, that 1 year forward inflation dropped to lowest in 18 months, and even the 5-year horizon moderated. I think a lot for the Fed to take away from these numbers. I think Japan has been again in the limelight as it's been throughout the year. The latest monetary policy meeting minutes indicated members wanted to be mindful of the impact of future exit from low interest rates on mortgages and the markets. It's highlighted growing attention of BOJ policymakers placing on prospects of higher inflation and possible withdrawal of more stimulus in the coming year. So even after falling 13% from the highs of $151.95, looks vulnerable to lose more with future tweaks to the policy. Of course, the BOJ has been ensuring that there is no runaway rally in the yields, and they've been buying bonds once again. It's been a listless period for the currencies, mainly because traders down to their shutters for the year. Most markets are closed today and some even tomorrow. The final 3 days should see flow-related moves, which will be within the ranges. And of course, yields have recovered a bit from the lows seen last month, or rather after last month's inflation numbers, but they will take cues from inflation plus growth in the new year. Finally, on the rupee, which still trades with a slight weakening bias, but mostly linked to seasonal flows, oil prices have risen nearly $3 a barrel after Russia said they would cut output by 5 to 7% in response to Western nations' oil price cap, but unlikely to impact rupee as we are still in the lower end of last 1 year's range. India is making further contribution towards de-dollarization as they plan, along with Russia, to drop all use of USD and even Euro for bilateral settlements. But they will have to find a way to settle trade balance. Yes, a lot of things are building up, but I think markets will chew all of this for some days and then come to full action in the first week of January. Thank you very much.
Okay, wonderful. It was actually quite brief, JK, and I love the spirit. But folks, we have a New York holiday today, so any which ways we'll have not much of an action. Having said that, on the price front or the data front, as JK mentioned, the price index for core PCE was lower, and we are observing some sort of steady moderation in the kind of updates that we are receiving. Even the 1 year forward inflation dipped. On the other hand, BOJ, as usual it has been in the news, has signaled the kind of a future policy tweaks that they are going to come up with, and probable slow exit from the stimulus they have been providing over the years. So that's quite interesting on the global front. But on the domestic front, if we have to talk about India, was another nation. India has become another nation towards contributing of de-dollarization and planning to move away from dollar or euro for that matter in their trades with Russia. It's going to be quite interesting, folks. Having said that, as JK mentioned, there's going to be not many updates. So we thought we'd like to take some break from as well, and also not bother you in your festive seasons. So folks, we shall be coming back on Thursday now, with some break on Tuesday and Wednesday. But in the meantime, I think I leave you guys with some Bob Dylan music to, uh, enjoy the few holiday days. And as Bob Dylan says, let's say the days go as blowing in the wind. So that's it for today, folks. We shall come back on Thursday. Till then, have a good festive mood and good festive seasons. Have good celebrations. That's it, folks.